When you think the market maybe have a downturn, then you need to know the what you're gonna do. You need to have an exit plan or hedging plan or some like strategies. So before we think about the downturn or upturn, um, so the here is the fear and greed index. So the equal to the 100, it means greed, and then it goes to the 0, it means fear. So now it's around the 70 area. So when you close to the 80, then we need expecting corrections. So this time we need to prepare for the some corrections depending on analysts. Some people say 5 to 10%. Some people say 20 to 30% correction possible. So either one, uh, we have a plan. This article this article I brought from the fidelity.com, and then the original is by Darren Fondar, and then published in Barron's July 13th. So the topic is the stock market is setting new record. Here's how to prepare for plunge. Okay, so we're thinking about the plunge. We need the insurance. So because the equity market is very volatile. So by the research, since 2007, when you're holding 100% stocks only, then in the average year gaining is 8.3%. But in your case, the 70 to 30 strategy, like 30% stocks, no, 70% stocks, 30% treasury bond. So in the case, your average gain is 8.2% per year. So the 8.2, 8.3, not much different. So but when you're holding 100% stocks, it's very volatile. So some people very fear. So before they gain something, they sold off first, right? So that's why most of the individual investors or retail investors, they said they lose money in the stock market because they play like a gamble. So when you buy and hold, then the 100% stocks is good. Um, but if you want to have a little bit peace of mind, then for your peace, you need some, the strategy, right? So let's just see more detail. Here is about the six things they said. Number one, put option, and number two, the inverse. Number three, long and short strategies. So in that article, they talking about even though specialists they or the hedge fund managers, even though it's their job, so that they doing, but uh, when do the hedging, then they spend the money, the cost, right? So when think about the cost, they don't have much benefit from the hedging result. So, and as a retail investor, we cannot catch up the market changing that fast. So I think number four is the more practical decision, like buy and hold treasury security in a certain percent of your portfolio, or in case just you have cash, and then when stock price going down, and you can buy the momentum sectors like online retailing, work from home technology, 5G wireless infrastructures, or some benefit stocks from the rebounding consumer behavior. And then number six, I added gold. So let's see more details. So in the same article, they suggest more detailed tickers. AGG is the U.S. aggregate bond, which means that they include the U.S. Treasury bond, and then invest grade corporation bond. So they have interest is about the yearly about close to 2%, and they pay dividend every month. And the second thing is the VGSH. This is a short-term treasury, so it's almost like a cash. The price not much changing, but they give you dividends every month. And third thing is the VOP ETF. VOP ETF means that they have a guideline like um, in case S&P 500 downturn plunge of around -5% to the -30%, the price is more stable, so it's a hedging in the the downturn. So the ticker is DFEB, and then next thing is the Verizon. So the stock price not much changing, but dividends is about around over 4%, so it's that's benefit. 5 and 6 is a Lowe's and Home Depot. People stay home, so they fix a house or they do gardening. And recently, new home selling is higher increased, which means that they fix and sell house, so that they are benefit um, stocks. Let's see that their chart for 6 months. This is a 6 month chart, and then let me reading for you from the bottom one. The bottom one is the Verizon, so it's -7% in 6 months. So, and then when I see the more long-term chart for Verizon, it's a little bit the downturn because they spend more money for 5G infrastructure. So, but I think not this year. From next year, Verizon price will be more up. So, when you think about the long term, or when you buy Verizon stocks and then just benefit from the dividend, in case the stock market going down, then maybe you can sell the Verizon stocks and then buy what you want. That's a good strategy, I think. And the next thing is the S&P 500. It was, okay, I'm sorry, the S&P 500 is -1%. Next thing is the VOP ETF, DFEB, that's 0.7%. And next thing is the VGSH, short-term treasury bond, that's 2% gain in 6 months. And the next thing is 5% gain, that's AGG. And then the blue line and the red line is a 13% gain. Blue line is Nasdaq, red line is the Home Depot, and purple line is Lowe's, 21%. So in 6 months, Lowe's are better than any other things. But when you see in the March, Lowe's down more, and Home Depot next, S&P next to Nasdaq. So when you think about the hedging purpose, I think your Home Depot is better. So here is the dollar index. So when we think about the gold, in my experience, we need to check with the dollar index. So the dollar index was in March went down and up because the Fed started QE, and they cut the rate. That's why. But recently, market more stabilized as the dollar index was stabilized. And then now talking about the vaccines and treatment, so it's more down and stabilized. Recently, it's going down, so which means dollar value going more weaker. So when about the dollar index itself, so see like here, dollar index go up. That's when we have a financial crisis or global crisis. Then in the case is the dollar index go up. The other case go up is the when U.S. market is so strong, then the dollar index go up. But nowadays, like the dollar index going down, that means the either the U.S. market is not that attractive, or um, U.S. market, the U.S. dollar going to the emerging market to looking for the higher return. So when we're talking about the emerging market, then you can think about the um, EEM, that's the ETF, invest in the emerging market, or you can choose one of a country like China, Brazil, India, Russia, and South Korea, Taiwan, those countries. And the other one is the dollar index going down, then usually oil price go up. But as you know, even though uh, the situation is a little bit controlled, but still we are in pandemic, so um, the the oil demand is not going up suddenly. So the oil price maybe stay in that this time price. And then the last thing is about gold. So the dollar price index going down, usually gold go up, right? So let's see the gold chart. So this is the gold chart, and so as you see, the 6 months gold price keep going up. So the okay, yeah, keep going up, right? So the gold price now is $1,873, and in dollar index is stay in this position, or going down further, then the gold price go up more higher in more steep way. And analysts say that this year gold price go up more than 2,000, and then next year um, more or close to the 3,000. So the long term, gold is the good, looking good. So let's see the more details about gold. So when we talk about the gold investor, so the followed by the dollar index check, and there's the practical way to invest the gold. Or one is the GLD here, GLD, that's the ETF invest in gold itself. The other one is the GDX, that one is the invest in gold mining. And the UGL, that's the leverage invest in gold. So let's see the chart here. So the lower part is minus 1%. That one is the S&P 500, 14% in 6 months gain. That's Nasdaq. Gold itself investing ETF, 19% gain, and double gold invest. So it's the UGL, 35% gain in 6 months, and then gold mining ETF, 44% gain in 6 months. So in this category, looks like so far gold mining ETF is better, but in this term maybe the UGL catch up the gold mining possible. So um, uh, in my case, I do the gold itself ETF, and then the gold mining, uh, the company, I mix it, and then I'm holding about 10% in my portfolio. But some analysts, they said, like optimistic analysts, they said about gold, you should hold more than 20% in gold related invest. So up to your plan, I mean the purpose or strategy. I want to have a good plan for the in down case. Okay, that's all today. Thank you. Love once more. Thank you twice.